Hello, this is Andrew from Trend Following Mentor. In this short lesson, I'm going to talk about Palo Alto stock, how I'm trading Palo Alto. First of all, this is simply for education. There's no there's no trading suggestions. I'm not a licensed registered investment advisor or anything like that. It's really just how to become a better trader and how to run your portfolio so you can almost be your own guru. Actually, I've written some books on trend following, and we're going to look at this from a trend following standpoint, Palo Alto. First of all, here's Palo Alto. And what you can see is they're color coded by greens, yellows, and reds. Green is pretty much an uptrend, yellow, not. And pretty much what I'm looking for is I'm looking for breakouts. That's kind of how I look to trade. First thing what I ought to do is before I even go into a stock, I want to make sure that I'm basically in sync with the index. And there's times I want to be in the market, and there's times I don't want to be in the market. And when I'm in the market, I want to be in the strongest stocks, in the strongest sectors, and use common sense. And you can see that at all this period here, up until, actually it was like beginning of October, where the market was deemed healthy vis-a-vis this model which I use in Metastock. And then it became then it also looked like it was on a buy again from October 28th. Using common sense, why Palo Alto? You read the news, there's been all kinds of credit card breaks from different companies. Palo Alto is a data provider. They're extremely profitable. So again, I want to be in a leading sector, in a leading stock when the market is deemed healthy. Going back, let's just tighten it up a little bit. You can see you had basically a breakout here, and as you can see, it didn't work. You want to keep your stops rather tight. I don't want to risk more than 7% for my entry. Let's say I bought in here at 85.78. So I would just basically, my hard stop, whoops, 1 second, 85.78 divided by, 1 second. If it goes to 80.16, the trade isn't working. And you can also see here it wasn't working, but I would have exited before this. Would have tried again. Guess what? Also didn't work. But then it did work. Then you had a nice move from here to 100. You went up to about 106. But look what happened around this time, going back to this other chart. We went on a sell. So one could really almost take their profits at this point and have avoided all of this. And next, going back to here again, because you want to trade in sync with the market, on October 28th, according to my model, I should have been in again. So anything from October 28th, I'd be looking to buy again. Somewhere around here. And you can see we took out the prior highs. We're riding up along the 10-period exponential moving average. Here's the 50. Today's earnings. That's what I thought to talk about Palo Alto. So again, use common sense. Use the idea that Fidelity Magellan and Peter Lynch used, where you think about ideas that are happening around you. Again, there's all these data breaches. So Palo Alto is one of these leading stocks that handles it. So you basically, you don't fall in love with any stock. You basically make a bet. If the market is healthy, I want to be in the strongest stocks, in the strongest sectors, which this is, and let's see what happens. I'm willing to risk a small percentage of my account size. So let's say, again, you have to pick the numbers that make sense to you. Figure out, again, let's say you have $100,000. Do you want to put $10,000 into 10 stocks? You want to put $20,000 into 5 stocks? You have to determine that depending on your risk profile. But then the other thing is, you know where the trade doesn't work. You know by these indicators. They turn yellow. If you want, if you're a Metastock user, I can send you these. You want them to be green, but the thing is, if it falls more than 7% from your entry, you're out. Nothing to think about. No second guessing, no buying the dips. This is what successful trading is. Buying the strongest stocks and the strongest sectors when the market is healthy. And again, you have to make your own rules, which will help you determine, in your risk profile. For me, what I do is I use very simple rules because that's the only thing that can hold up. I want to see the 10-period exponential moving average greater than the 30, greater than the 200, and we've risen more than 3.5% from the lowest low over the last 100 days. And I get a buy signal, which you can kind of see right here. And if it turns down, I'm out because you never know how bad the market can get. This is my website, Trend Following Mentor. I've written several books, The Bible of Compounding Money, The Bible of Trend Following. Let me tell you, none of this is easy. It's never easy. You always have to be able to accept losses. You have to try, and I'll underline the word try to keep them small, that you have to stay diligent. Never give up. Because you're going to have series of trades that just don't work. And if you want to have, let's say, the so-called financial freedom, you need a trading plan that matches your personality, not mine, not someone else's. Don't try to look for tips from anyone. You got to work. And this is a lot of work. I mean, I scan stocks in MetaStock to come up with the strongest stocks. I read. A lot of it's common sense. Alibaba, how can you miss it? I mean, here, let's look at Alibaba just as a quickie. I mean, and I'm not recommending it or anything. I'm only looking at a handful of stocks. And I don't know if the trade will work or not work. But basically, I bought the IPO breakout here. Let's see what happens. I have no idea if it'll work. But, I mean, it's just paying attention to what's happening in the market. If you have any questions or any way I can help you, here's my email. It's andrew@trendfollowingmentor.com. Again, I can help you do or prepare your personal trading account, your trading plan. I also offer personal mentoring. I do mostly that for organizations. It's nothing perfect. This is a marathon. It's never easy. You have to control your losses. You have to control the way you think. There's no such thing as greed. You just keep on putting them on, staying out of big trouble. Again, if I can help you anyway, please let me know. Thank you.